Macroeconomic modeling relies heavily on established assumptions. When a critical global supply chain is bordered by a rising military power, analysts assume that proximity to kinetic hardware directly inflates risk premiums. For decades, risk models applied this heuristic directly to Taiwan. The frequency of military maneuvers by the People's Liberation Army, specifically flights into Taiwan's Air Defense Identification Zone, has been treated as a highly reliable, quantifiable proxy for impending market instability. The underlying logic is straightforward. As gray zone military incursions escalate, institutional capital allocators should theoretically demand a higher premium to hold local equities. Fearing disruption, they pull liquidity, driving down asset valuations in the target nation. If this institutional heuristic holds true, the empirical data should show a clear inverse relationship. Periods of maximum military pressure from Beijing should perfectly align with massive capital outflows and the collapse of Taiwanese equities. This chart tracks reality against assumption. In 2020, the red line shows 380 PLA incursions against the blue TIX line. By 2021, flights surpassed 950, yet the TIX climbed to 18,200. Through 2024, despite annual incursions exceeding 1,700, the TIX exploded past 23,000 points. The divergence became absolute by late 2025. During an unprecedented set of encirclement drills, formally designated as the Justice Mission, the market ignored the threat entirely. The TIX rallied to historical peaks concurrently with the maneuvers. The Pearson correlation between daily military coercion and capital market performance is effectively zero. Global capital allocators have completely decoupled their valuation models from the immediate military threat. Market observation is anecdotal. Econometrics provides the proof. In April 2025, researchers published a quantitative analysis in Science Direct, explicitly testing Taiwan's market resilience against this rising military pressure. To test this, researchers built a matrix isolating 4 market tiers on the vertical axis: TAIEX, ETFs, stocks, and sectors. On the horizontal axis, they applied 5 rigorous statistical treatments to PLA flight data. Out of 20 permutations, 0 yielded a statistically significant correlation. The quantitative evidence cleanly disproves the institutional assumption. From macro indices to micro-cap equities, the pricing mechanism of the market structurally ignores the flight count. There is one apparent anomaly in the timeline. In 2022, PLA incursions hit an absolute peak of over 1,727 flights. That exact same year, the TAIEX index plunged by 22%. August 2022 brought an acute geopolitical trigger. The diplomatic visit by Nancy Pelosi prompted immediate and highly aggressive PLA encirclement drills, creating a sharp spike in localized volatility. However, attributing the 2022 equity drawdown to those flights mistakes correlation for causation. The primary catalyst for the 22% drop was a global macroeconomic contraction, driven by the U.S. Federal Reserve initiating one of the most aggressive interest rate hike cycles in modern history. Even in the year featuring the highest volume of military posturing, the market's depreciation was dictated by global monetary policy. Geopolitical noise failed to override macroeconomic gravity. To understand why the market ignores the military data, we have to look at the structural forces driving the decoupling. The first is a mechanism known as signal normalization. In behavioral finance, habituation occurs when traders are repeatedly exposed to a stimulus that does not result in physical destruction or financial loss. After years of daily flights, the market simply stops reacting. A 2023 study on the psychological impact of these maneuvers revealed a crucial detail. 77% of the emotional distress regarding PLA flights was entirely mediated by news reports, not direct experience. Capital markets serve as a highly objective filter for information. Traders quickly learn to classify media-amplified, non-kinetic gray zone tactics as irrelevant background noise, stripping them of any actionable risk premium. The second dynamic is the immense gravitational pull of global technology capital, specifically the immense expansion of the AI and semiconductor cycle. To quantify this gravity, consider the composition of the Taiwanese market itself. A single entity, Taiwan Semiconductor Manufacturing Company, accounts for nearly 40%. The price correlation coefficient between TSMC and US-based NVIDIA currently sits at a staggering 0.96. The multi-trillion-dollar global demand for artificial intelligence compute power generates an economic gravity so massive that the daily marginal data of a few extra fighter jets is entirely crushed out of the pricing algorithms. The third dynamic driving the decoupling is the pricing of the silicon shield and the implicit market calculation of mutually assured economic destruction. The capital markets hold a very specific implicit assumption. Any kinetic invasion capable of halting these extreme ultraviolet lithography machines would paralyze the Chinese technology sector just as severely as the Taiwanese economy. This creates a strict asymmetry in risk assessment. Sophisticated capital models easily distinguish between performative gray zone harassment, which does not disrupt shipping lanes, and an actual kinetic blockade. Because the probability of total economic suicide is heavily discounted by institutional capital, military maneuvers are treated strictly as routine political theater. They have exactly zero impact on corporate cash flows. Under a Foucauldian framework, these continuous daily incursions operate as a highly visible spectacle of power. They are engineered to exert cognitive discipline and anxiety over a specific population. But while the intended target of this cognitive warfare is human psychology, the actual battleground where resilience is measured is the global capital market. Capital acts as an emotionless arbiter. It cannot be disciplined by performative threats or political anxiety. It responds exclusively to objective, measurable realities: corporate earnings per share, massive semiconductor order books, and uninterrupted supply chain logistics. By relentlessly bidding up the TAIEX in the face of rapid military intimidation, global capital effectively neutralized the adversary's primary psychological weapon, rendering the spectacle powerless. The decades-old assumption that constant military pressure automatically degrades market resilience is mathematically false. For quantitative analysts and macro-strategists, the prescriptive takeaway is clear. Risk models must be recalibrated. Daily ATIS flight counts should be entirely excised as a predictive variable for asset valuation in the region. True market direction in Taiwan is anchored by the physical realities of global inflation trajectories, Federal Reserve liquidity cycles, and the hard constraints of AI compute demand. The market prices the physical reality. It ignores the cognitive spectacle.